One quick illustration on section 91 for better understanding, and then toward the end of the chapter we will discuss past examination questions. Section 91, unilateral agreement or unilateral relief. Nandita, an individual resident retired employee. So very important word, resident. Retired employee of the Prasar Bharati, age 60 years. So resident senior citizen, you should know her basic exemption limit is actually 3 lakh rupees, and all the limits, all the higher benefits which are there in law, like in 80D the higher limit is 50,000. So all the higher limits or benefits will be applicable to her. Before you can start solving the questions on DTAA, you must be thoroughly done with your basic income tax provisions. Domestic income tax provisions is well known dramatic deriving income of 1,10,000 from a theatrical works played abroad. So she is artist also, she is going abroad and playing some roles, and she got 1 lakh rupees, 1,10,000 rupees. Tax of 11,000 was deducted in a country where the plays were performed. So 11,000 withholding tax, TDS or tax in that country has been already deducted. India does not have double taxation avoidance agreement under section 90 of Income Tax Act with that country. Because India does not have DTAA with that country, therefore we have to jump to section 91, that is unilateral relief. Her income in India amounted to rupees 6,10,000. In a view of tax planning, she has deposited 1,50,000 in a public provident fund, that is ATC, and paid contribution to approved pension fund of LIC under 8032. This is available under ATCCC. But whenever ATC and ATCCC comes together, you know that one bonus section you have to remember is ATCCE. We say the total deduction cannot exceed in this 3 section, the deduction under all this section cannot exceed 1.5 lakh under ATC, under ATCCC plus under ATCCD subsection 1. So this is also you should remember. She also contributed 28,000 to central government health scheme during the previous year. So this 28,000 is available under 80D and fully available because for her limit is 50,000 being a senior citizen. So whole 28,000 will be allowed, and gave a payment of medical insurance premium of 26,000 to ensure health of her mother. Now for mother there is another group. Obviously if she is a senior citizen, daughter herself is a senior citizen, so her mother must be a senior citizen. So non-resident age 84 years, but she is a non-resident, and for non-resident we don't apply the higher limit. For the non-resident individual we apply the standard limit, and the standard limit for a non-resident mother would be 25,000. So though she has paid 26,000, maximum deduction that she can claim is 25,000. Compute the tax liability of Nandita for the assessment year 21-22, assuming that she has not opted for section 115 BSc. So you can see the Indian income is 6,10,000. Apart from that, some deductions has been computed, and there is a double taxation relief. Ignore double taxation relief. First, let's focus on domestic taxation. Let us focus and compute tax in India on total income. Let's look at that. Indian income 6,10,000, and foreign income is also taxable in India because the person is ordinary resident. So global income becomes taxable in India. Gross total income 7,20,000. From that ATC deduction, you know the deposits in PPF 1,50,000, ATCCC 32,000. Total is 1,82,000, but overall limit under section ATCCE is 1,50,000. ATD, obviously for herself she can claim the full benefit of 28,000 because she is a resident senior citizen. So limit is 50,000 rupees, and for her mother, though she has paid 26,000, she will get benefit of 25,000 itself. So total deduction is 2,03,000. If you subtract that, your total income is 5,17,000. Your total income is more than 5,17,000. Therefore, you will not get the rebate. Please understand that as well. So you have to compute the tax up to 2.5 lakh. No. Up to 3 lakh nil, and then please understand up to 3 lakh nil, 3 lakh to 5 lakh, 5%, that amounts to 10,000, and then 17,000 multiplied by 5%, 17,000 multiplied by 20%, that is 3,400. So 10,000 plus 10,000 up to 5 lakh plus 3,400 on balance 17,000 at the rate of 20%. So income tax comes to 13,400. On that you have to add 4% health and education cess. So tax in India will be 13,936. How do we compute average rate of tax? tax in India divided by total income in India into 100%. So the average rate of tax is 2.6996%. Now average rate of tax in a foreign country, you know that they had deducted 11,000. So on 1,10,000. So 11,000 divided by 1,10,000 into 100, that comes to 10%. Obviously they are having 10% tax amount there. So what deduction we will provide? Whichever is lower. So Indian average rate of tax or foreign rate of tax, whichever is lower. So that's a double taxation impact, or that's a double taxation effect we are having on the foreign income. So, and how much is the doubly tax income? 1,10,000. India is also 1,10,000 and foreign country also it is 1,10,000, because there is no set of deductions specifically available against this income. So 1,10,000 into the whichever is lower rate of tax. So she will get a relief of 2,966. If you subtract that, her net tax payable in India will be 10,970. I request all of you, please solve the same question again one more time in your notebook and practice by solving. See, I'm not wasting your time by solving and writing all this content here. If I don't type and give you, it will take more time unnecessary. So please, I'm requesting you, your exam is in written form. You have to write it down and practice. You are doing this for the first time. So you must practice at least 3-4 questions in writing. Okay. Some notes. ATD, you know that maximum deduction is 5,000. The basic exemption limit for resident senior citizen is 3 lakh rupees. The assessee shall be allowed deduction under 91 provided all the conditions are satisfied. What were the conditions? The assessee is a resident in India. Yes, she is a resident in India. Income accrued arises to him or her outside India. Yes, sir, outside India. Such income is not deemed to accrue or arise in India. Yes, sir, that was not Indian income in any sense. It was purely foreign income. The income in the question has been subject to income tax in the foreign country and assessee has paid the tax, and with that foreign country we do not have any DTAA. If all the conditions are satisfied, therefore she is eligible for section 91 relief. This is what our institute expect you to write when you solve the question on section 91. So we don't get marks only for solving the question. We also have to present notes below the main answer. Thank you.